The markets bounced back in January as the US Federal Reserve toned down interest rate expectations and the US government reopened. What's concerning for retirees is that the market is now expecting interest rate cuts in Australia going forward, which is a significant change from expectations of interest rate rises just a few months ago. This highlights the relative lack of good income opportunities outside Australian equities. During the month, oil prices bounced back and the iron ore price rallied 16% after a tragic Vale incident in Brazil. Financials, and banks in particular, fell in the lead up to the Royal Commission findings, but actually rallied after the release of the findings in February. Underlying investments trailed the market slightly, up 3.5% for the month, which brought the total return over the last 12 months to 5%, outperforming the market by 2% after fees. PL8's best performers during the month were Beach Petroleum and Fortescue Mining, which are up 34% and 35% respectively, benefiting from their respective commodity price rises. Challenger also announced a disappointing update during the month, which aided relative performance as we don't hold it. BHP also paid a special dividend during the month, which was almost as large as the usual full-year dividend is. However, overweight positions in Qantas and ResMed underperformed, and underweights in Newcrest and Cochlear detracted from relative performance after rallying strongly during the month. At Plato, we're positive about the outlook for dividends over the next 6 months, where companies will be increasing dividend payouts, particularly those from the likes of Wesfarmers, Woolworths and Woodside Petroleum, which Woodside Petroleum's actually already announced an increase in dividends, to name a few. These increased payouts may come in the form of off-market buybacks, special dividends, or in the case of Woodside Petroleum, an increase in normal dividends. We wouldn't be surprised if NAB actually cut its dividends in the next 12 months after they appoint a new CEO and chairman, as their payout ratio is close to 100% given the current dividend payments. Telstra also announced a cut in its dividend during the February reporting season, and interestingly its final dividend is now 5 cents a share with a 3-cent special, compared with the 15.5 cents it used to pay before it started cutting dividends. Plato actively forecasts the likelihood that each stock will cut its dividend, which is an important part of our process and has been very successful over time. For more news and insights, please visit our website www.plato.com.au, and thank you for watching today.